Make multinationals pay their fair share of taxes is one of the most important tools in addressing inequality. Multinationals avoid taxation to the tune of at least $240 billion per year by shifting profits to tax havens. This puts pressure on countries to compete in both attracting investments and lowering corporate tax rates, the so-called race to the bottom. A global minimum tax can drastically reduce the financial incentives for multinationals to shift profits between jurisdictions. ICRIT supports a global effective minimum tax of 25%, which would generate $500 billion of additional tax revenue that can be invested in public services and the fight against climate change. $500 billion is enough to cover annual salaries of almost 40 million nurses. A 25% minimum tax would enable countries to make huge advances in reducing inequality and invest in sustainable development. The G20 OECD agreement on a global tax of 15%, which was made in October 2021, is too low. It will not stop profit shifting from developing countries which have much higher corporate tax rates. The agreement reinforces existing inequalities between countries. It does so by allocating the lion's share of the additional revenue to the home countries of the multinationals, which are located in rich parts of the world. Inequality is the result of the institutions and policies we have. It is in our power to shape a future for all of us by ensuring that multinationals paid their fair share of tax. It is in our hands to mobilize tax revenues, to educate our children, provide adequate healthcare, and build a safe and sustainable future for all of us.